But Ashi Anand as well joins in on the show right now. Ashi, hi, afternoon. What's been the market strategy of late?
Hi, first of all, thanks so much for having me on the show. I think the market strategy of late is just sit and kind of watch what's happening in the markets. I think there are a lot of different moving parts. There are clear headwinds that we have spoken about. Growth is kind of weak. You have uncertainty around Trump, and all these uncertainties kind of have led to an overall market decline. There are a kind of few green shoots that we have been kind of looking at. You've had the recent kind of quarterly GDP numbers which have come in at 6.2%. Not great, but at least a big improvement over Q2 kind of numbers. Oil prices are down. You have seen some kind of reduction in the US 10-year bond yields. So I think the way we are really looking at the markets is we continue to be quite cautious. We probably believe that in the near term, the downside risks are probably a bit higher than kind of upside risk. But we are also cognizant of the fact that markets have corrected. There are certain kind of things which are improving on the horizon. So we are kind of going in, but we're kind of going in slowly as we're waiting to actually look and wait for the overall market environment to improve.
Right. Ashi, good afternoon. Cheryl also joining the conversation. And yes, we've had a lot of them talk about the fact that BFSI space, or rather banking sector, is the one that is actually going to be the next set of leader. But I want to get your view on the BFSI space, because when you talk about financial space, there's so many moving parts. It's not just the banks that you're talking about. You talk about the NBFCs. There is capital market players also that come in this particular domain. There's insurance players also that come in this domain. What's your take? Which one do you think, or the sub-segments or the micro trends that you are spotting in the entire financial space?
Okay, sure. Yeah. So BFSI, right? As you indicated, there are multiple kind of sub-segments within that. I think the one space that we are very comfortable with, and I think a lot of other people in the market also see a lot of kind of growth and value in the space, is kind of banking. Now, within banking, if you're kind of breaking it up, you have some of the very high quality banking franchises, the ICICI banks, the Kotak, Bajaj Finances, HDFC banks. A lot of these are actually available at valuations that are lower than what they were available at historically. These are great compounders of longer term wealth. And actually, given the fact that valuations are cheaper than where they were earlier, they become really an interesting time to kind of buy into something which you can just buy and hold over the kind of longer term and just see a steady kind of compounding in wealth. On the kind of other hand, in kind of banking itself, you have certain pockets where there has been pain of late. And specifically, if you're kind of looking at banks which have exposure to unsecured and microfinance. Now, this would include banks like an IndusInd, an RBL, and IDFC First. Some of these banks have had specific bank-related challenges, but the space overall has actually seen significant value erosion. Valuations are very, very cheap, and from a bounce back kind of play, buying them once kind of the pain finally settles, there could be a very interesting trading play in these kind of names. This kind of is the overall kind of banking and kind of also like just financiers, right? So banking or NBFCs. If you're looking at the other segments within kind of BFSI, capital markets is something which holds a tremendous amount of longer term promise. But for these stocks to kind of do well, you really need an underlying bullish market kind of environment. These stocks have done very well over the last couple of years. We are watching the space fairly closely. We have exposures here. We're actually hoping at some level that they do correct a bit more for us to be able to increase our exposures, because the kind of value creation you're likely to see in capital markets over the coming decade because of financialization of savings can be very, very substantial. The important thing to note is these are going to be cyclical, and if you're entering a bit more of a bearish market phase, they may not perform. I think the one other important space is clearly insurance. Insurance as a space has not performed for quite a few years now. Continues to hold a lot of attractive longer term kind of promise, and valuations are actually quite cheap. There have been kind of various regulatory headwinds, most of which are now factored in the price. So I think insurance is also quite attractive from a defensive perspective.
Interesting. And actually, what about tech right now? How are you, sort of looking at the landscape? Services, of course, on one hand, and the entire new age lot on the other.
Okay, so I think the simple one is the new age lot, right? So listed digital platforms we see as the most attractive investment opportunity in India over the coming decade. I think markets are going to be surprised by the sheer level of growth and the ability for that high growth rates to sustain over the coming decade. And a large part of this is driven by very, very strong enablers that you have in place for longer term adoption of digital tech. The other thing is that I think market participants don't really appreciate the true longer term profitability of these businesses. There are large parts of the cost structure that are related to current hyper growth investments. These costs can actually reduce substantially as they achieve maturity. And we believe these companies are going to turn not just profitable, but highly profitable, generate very, very attractive free cash flows, very healthy ROEs, and this combination of strong growth and kind of profitability, we see as a very great recipe for value creation. What you've seen in kind of US tech over the last decade is what we believe has the potential to happen for Indian listed digital platforms over the coming decade. The IT services part of the story is a bit more different. What you do have here is, I think, a fair deal of confusion around what's happening with the US economy. Is Trump going to be positive or negative for the US economy? And I think as weeks kind of go by, that view keeps changing. And this is also more a nearer term call, right? Is there a trading play in IT services to play a bounce back of the US economy and IT demand coming out of the US? The slightly bigger problem of IT services is, I think, the longer term impact of artificial intelligence and the kind of potentially deflationary pressure this could have on IT services is something which is still kind of not very clear, which makes it a bit difficult to kind of give them very high premium kind of valuations. So while we do have exposures in IT services, we see that as potentially an interesting nearer term play. I think the longer term play is just clearly a lot more attractive in listed digital platforms.
So that's the take coming in on some of those names. But we earlier in the day spoke to Yashish Dahiya, who is the chairman and the group CEO of PB Fintech, where he clarified that PB Fintech won't be a majority shareholder in PB Health and will have a 30% stake. Listen into what he had to say.
PB Fintech is an incubator of the idea, but does not intend to be a majority shareholder or the owner of the company. So PB Fintech will have maybe 30% equity in the company for the 800 odd crores. Now, after this, PB Health will run its own business with whatever the 2,000, 2,500 crores that it raises. At some point, it may run out of money. And then PB Health may say, I want more money. Now, arranging that money is the job of the PB Health board, the PB Health management. PB Health shareholder, as a 30% shareholder, has no liability to put in a single rupee more. As of today, I must also clarify, I don't envisage, of course, opportunities can change, situation can change, but I don't envisage PB Fintech ever having to invest anymore.
All right, so that's the take coming in from the management of PB Fintech. Vinay, let me come to you and get your view actually on the real estate sector. And the reason being is that this has been quite an underperformer of late. No doubt today it is among the top sectoral gainer, 3% up move. But real estate, do you think that it is beaten down enough that now it will only see a bounce back?
Yeah, there is a good possibility that it will bounce back from here, though it has underperformed in last 3 months. But looking at the chart, I can see there is a strong base around 800. I'm talking about the Nifty Realty Index, which is quoting at 822. So there was a strong support at 800 quite a multiple time. It took support there and bounced back. And today also it is attempting a recovery and sustaining at higher level. So the way market is reversing, I think there is a good chance that high beta sector like real estate can bounce back from here. So we can easily see 2 to 3% upside in the index itself from here, because most of the large cap as well as the mid cap stocks in the real estates are looking oversold on the chart. So a stock like Prestige, Godrej Properties, DLF are looking stronger at this point of time, and not if not reversal, but they are ready for the pullback from this level. So yes, I'm expecting at least 2 to 3% upside in the realty index, and stocks may go up by 6, 7, 8% easily. I'm talking about the large cap real estate stocks.
Well, the big story, of course, today is BYD and that new 1MW charging platform, which is clearly sort of all the rage right now, and it's clearly being marked and pegged as the tipping point in the EV industry. It can add about 250 miles on a 5-minute charge, which is almost as fast as literally filling up a gas tank, and sometimes even lesser than that. BYD is going to start building 4,000 chargers in China, but the question on the street is, imagine if it starts rolling this out across other countries as well, and what kind of dynamics would it really bring, not just for Tesla but for other EV players globally, and then of course the entire Indian infrastructure as well, given that BYD does sell here in India as well. But that said, looking at the auto pack, that's looking definitely charged today, be it M&M or Tata Motors. They're all holding up quite smartly. Reliance, like I said, still looking flat. Kunal, why is that? Just not participated, Reliance. Couple of brokerage upgrades came in. It sort of dragged its feet around that 1220 odd level, but nothing beyond that.
It has this tendency, Aisha. So in worst of the market corrections and the best of the market times, the stock remains aloof in its own zone as such. So we tend to anticipate that that's the nature of the stock price, and it's always best to try and buy these kind of stocks, which they generally tend to move in their own tangent altogether. To when these stocks confirm breakout for themselves, and breakout specifically of strong psychological mark. In this case, I think 1300 could be the first psychological resistance for Reliance Industries, and also I think technically it's a slew of resistances over the last 3 months specifically for the stock. So would not anticipate any kind of a major up move into the stock price. Even the volumes over the last couple of days have gone docile for Reliance Industries. So my belief is that the stock would probably move up higher gradually, but I think the real momentum would come back only once the stock crosses levels of 1300.
All right, so that's the take coming in on those counters. Vinay, let me come to you and get your BTST idea for our viewers.
Yeah, so one of the stock which I like is the Torrent Power. So it was oversold and has witnessed a healthy correction, but now it looks like that it is headed higher and it is closing above its 50 days EMA. So the stock is placed around 1372. So I like it for the BTST. You can keep a stop loss at 1350. I am expecting that overall positionally, if in the next 3-4 days it can achieve a target of 1435. But yes, for BTST also you can expect 2-3% gain from this level. So yes, Torrent Power is a good bet for the BTST.
All right, so that is Torrent Power coming in for Vinay. What about you, Kunal?
So I'll go with a couple of buy calls. The first one is one BEL. That's a chart which has started to look attractive, especially with a slight bit of underperformance in the last couple of days with respect to the other peers. So we'll look out for targets in the range of 300, stop us at 275. Bharat Forge is the other stock which I would believe is also nearing a very strong breakout. It's a consolidation breakout just about that 1100 mark for Bharat Forge. The stock is at closer to 1090 levels. So we'll look out for targets in the range of 1200, stop us at 1055.
Okay, that's the take coming in on some of those stock strategies. In the meantime, we're going in strong today, of course. I can't pinpoint a single sector which has actually been a laggard, although there are, some dots of red within the IT pack. Reliance, like we were just discussing, and Bharti as well is languishing today. But other than that, and of course, Bajaj Finserv, we're not really seeing many such laggards on the street right now. Sectorally, of course, it's all in the green in any case. This Chambal Fertilizers too, which is down today, and SBI Cards perhaps, but again, less than 1% of a fall coming in there. It's only Bajaj Finserv which really sort of stands out like a sore thumb in today's, strong market. But Ashi, do you think that, still very much, the concern in the market is what happens to US, what happens to the dollar move, and, what the anticipated Fed action could be later this week?
So yes, I would think so, right? I wouldn't overtly read into the current kind of market bounce back. The good part is over the last kind of couple of weeks, you have seen kind of days where international markets have been down quite sharply, and India actually wasn't down as much. And that's actually a bit of a reversal from what we've seen over the last couple of months. So there are kind of a few kind of positive signs here and there, but I think for the market direction to fundamentally change, you do need clarity on a few important elements. Firstly, and I think probably most importantly, right, how is growth going to re-emerge in India? You have currently both consumption and capex growth, both of which has actually slowed quite considerably. You need this to come back, kind of, and this is probably the utmost kind of or the most important factor. But apart from that, you also do very clearly need some kind of visibility of what's going to happen with the US economy, and importantly, trade policies coming out of the US, and also very importantly, kind of interest rates. I kind of think that the Fed may just be on a bit of a pause, because even they are kind of trying to understand what's happening with the economy as a function of Trump policies. So we don't necessarily expect a lot of clear news flow to emerge in the next couple of weeks. So which is why we kind of broadly believe that you are likely to remain in a bit of a volatile market over the next couple of months until you get some clarity around some of these factors.
So that's the take coming in on the space. But if you look at the market now, near the day's highest point, 1.5% uptick coming in the markets, 22,850 is what we are actually reclaiming. And Kunal, sometimes it feels like I just hope we are not jinxing it, because given the fact that any green on the screen, after a few days, you end up seeing the shade of red.
Yeah, so I typically say that more doubt is better, is a fuel to the market rally. So the more the doubt, the more the chances are that the markets would rally, because we tend to have a very short I would say memory as such, because we look at the recent past and then we anticipate that maybe the markets would probably want to mirror the kind of reactions which you've seen historically when there has been any kind of a breakout and those breakouts have been sold into. So I believe that this could be a good change which the markets would probably foresee going forward, and my sense is that we should see a further up move going forward.
All right, so that's the take coming in on markets. Vinay, what's your view coming in on the entire the pharma play at this point in time, given the fact that everyone's waiting as to what happens with the reciprocal tariff? There is somewhere a sense that it wouldn't be as harsh as one would expect, especially on the Indian pharma industry. So based on that, there are some of the reports indicating that you can be positive on the pharma sector. On the charts, if I have to bet on the pharma space, then which of the pharma stocks do you think that one should bet on?
Yeah, so talking about the Nifty Pharma Index, the recent low was made on 4th March when Nifty Pharma Index was 19,600 odd levels. Now it has reached about 21,000. So healthy pullback we have seen. And now the Nifty Pharma Index has reached the 50 and 200 days moving averages, exponential moving average, which coincides at the same level. So I think after a strong pullback, they have reached a resistance on the short-term charts. So there might be a case of profit booking here. So it is better to wait for taking an aggressive long view at this point of time, because after pullback, the underlying has reached to the resistance level. And amongst the pharma stocks, the technical setup of supply looks quite strong. So supply is one of the stock which we already have recommended to our clients. The another stock which I like on the chart is the Divi's Laboratory, which is looking stronger to me. So these two stocks can outperform in the pharma space.
The take coming in on pharma. In the meantime, going pretty strong right now. Bajaj Finserv, Chambal Fertilizers, Bharti, SBI Cards, Techem, of course, are the laggards today. But other than that, it's been pretty a strong show. Look at NCC, that's made a strong comeback today, 4% higher for that stock. IREDA has come back a good 5% over there as well. Adani Transmission, 1% of a move coming in there. And IIFL as well is going pretty strong, almost a 5% bump up is what you're seeing over here. Actually, what happens to, the market darling themes? Say, for instance, the entire capital market theme, wherein till the market began losing sheen or correction, you had pretty much the entire spectrum hold out well.
Oh, we kind of expect that theme to, not just capital markets, right? If you're just seeing the kind of themes that did well over the last couple of years, and these have been the themes that have kind of led the fall. So it's capital markets, capital goods, real estate, defense, digital. We kind of believe that these are really the segments where you are seeing higher and faster kind of growth dynamics. these are also going to be the kind of segments where you are likely to see the largest levels of value creation over the coming decade. If you're just looking at long-term growth rates, consumption has been struggling. IT is kind of struggles to grow beyond kind of low double digits, if at all. You have pharma, which kind of has pockets of growth, etc. We kind of believe that a lot of the longer term growth is going to come from these themes. They had kind of run up probably well ahead of fundamentals, and the correction that you're seeing at this point in time are just kind of them coming back towards slightly more realistic valuations. One can argue that they still have a bit more to fall before they really truly kind of reflect underlying value. But given the fact that a lot of growth is going to happen in these areas over the coming decade, it continues to be a space that we believe is very attractive to be investing in. Perhaps you just want to be careful about the timing of the entry.
Point taken. But on that note, thank you so much, Ashi, for joining us on the show to give your take on the markets, how one should actually allocate and strategize in their portfolio, given the fact the way how the markets are moving.